let's put the log chart of Bitcoin up. Let's say that's our proxy for the space. Well, the log chart of Bitcoin tells you get to $1 million in not very long. Not very long, meaning like 5 years, or whatever the number is, right? Again, it's not forecast per se. It's like by this, by then, but it's the trend of direction. So what must be true for that to happen? Well, a lot of people have to have bought Bitcoin. If a lot of people have bought Bitcoin and Bitcoin is currently losing market share, it means that the whole crypto market has absolutely exploded. So if that were to be true, what would be happening for that to be true? Well, many of these things that we're seeing experiments now are likely to get mass scale adoption. How? Okay, the trend is you can now own digital assets, you've got these IP rights, you've got these contractual things. Well, for this world to be happening, then this is going to have to be most likely meaningful. You won't get all of these. Many of them will fail. Specific projects is even harder, but the overall direction is much easier. So in a exponential asset, much like Amazon stock, which is and Facebook stock, you start early stage of adoption with high volatility because you don't know whether it's going to succeed. Are we going to get adoption or not? Then over time, the volatility shrinks, but the rate of increase continues to go higher in that logarithmic exponential trend. So to understand all of this, you just need to put up log charts of everything, and everything looks normal then. Same as it does for Google, Facebook, Amazon, Apple, Tesla, they're all the same. And they're all network effect businesses. Even though you don't know what the network effect of Tesla is, there is network effects that's built into that stock. So now we are down 50%, 2 standard deviations oversold versus that logarithmic trend, which is normally where the market turns around. So this should be normal price action within the trend. So that's telling you should be more leaning forward and saying, okay, I'm looking for the low. Is it here? Is it a bit lower? Blah, blah, blah. And I think we reached that low. Again, it's very much like equities. It's probably 60-40, maybe 70-30 in the case of crypto that we reached that low. So why? What is the next accelerant? Well, we know there's more adoption from institutions, governments, and everything else. What's happening geopolitically is another adoption factor. So that's interesting in itself. If you don't own assets, you need to own an asset that nobody has a claim on. Bitcoin and all of crypto, there are no claims. So you own it. And it's proven ownership, and you can store it. So that makes it very attractive for people who see what's going on, good actors and bad actors, to say, okay, I need this. Now, blockchain's not very good for bad actors because you can trace everything that everybody does, but it means that you're out of the system. So that is pretty powerful. Then for sovereign states, particularly sovereign wealth funds, they will look for a long duration asset of which gives them some security, so it has a place. So we will see a further adoption for sovereign states of this, not necessarily as a currency, but as an asset. So I think that is very, as a reserve asset, I think that's very interesting. I think that's the place of Bitcoin in the world, as a kind of pristine collateral reserve asset. So we've got the sparks in place. The next thing we need is the inflation story to die. That would be a true accelerant, and growth to be falling and the central banks to be printing more money, because it does very well. It drives adoption. It doesn't just drive the price up like it does with equities and gold and real estate. It drives adoption, which is why it always massively outperforms everything else in times of monetary largesse. So you're setting up for a perfect storm here. And that's so the argument, was it going to go lower before, blah, blah, blah. Right now, unlikely. There's a probability of it. Still a decent probability, call it 30%, 35%, but I think unlikely. So we're in the fastest pace of change, and people are going to find it hard. People fear change. They want to look back on times that they understood. But every time has been not understood by somebody a bit older, because it always feels like it's changing. But this is really going to accelerate. And if people can't get their heads around what's happening in cryptocurrencies, I don't know what they're going to get their heads around with what's about to happen. So for all of that to be happening, which is all part of this fourth turning, everything else, therefore, social tokens are clearly going to be gigantic. Why would you not, if you were the world's largest pop star, take the intangible of brand and community? Why would you not turn it into a tangible of a token? You're unleashing billions of dollars of value, in fact, trillions of dollars when you look at intangible assets on balance sheets of firms, and you're sharing it with your community, which makes them rabid fans. So then you have to argue with yourself, okay, the probability is so high because the incentives are so aligned. What could be true to make it not happen? And I can't find a good reason outside of regulation, but it's going to be very hard to regulate supporters of football clubs. These are average people. You're giving them a chance. You're giving them an asset that they can own, that's not nosebleed valuations, that they can develop and they can help grow. So the political backlash of trying to stop this is too big. So that's what living in the future is about, is for this to be the case, then what must be true for that to happen? So that bond chart, if you live in the future, you extrapolate that trend, you are cognizant of the fact that the trend will break at some point. And maybe, as some people suggest, it just trades sideways and we've had the low. But what it tells you is a lot of things about debt, demographics, disinflationary trends, technology, and therefore you can extrapolate several things going out. You know, the future tells you the probability is that the economy weakens fast and therefore bond yields don't break out. If that is the case, therefore, the ongoing exponential trend in exponential age stocks, i.e. these network effect stocks, will continue because inflation is the only killer of those. And if inflation is not going to be the problem. So it gives you lots of ways of living in the future by extrapolating out with probabilistic frameworks, and of which things can change. And that's okay too. And then you have to change your ideas. The moment you overcomplicate it by looking for the weakness or a particular nuance in it, the moment you will miss everything. Now, that doesn't mean you shouldn't be skeptical of stuff, but you need to go through the process of thinking through the weaknesses and then think, are they so big that they overwhelm the larger, which is a question you raised before about World War III versus the other outcomes. The vast probability is that this is solved in a way for this situation that may have long-term ramifications that we talked about as well, but is unlikely to be world-ending because, well, then nothing matters anyway. So it's making choices like that. It's make choices like, where do I keep my money, my savings? You know, is blockchain and cryptocurrencies and digital assets, is that something I should be exposed to if I'm looking for a longer term future? Or do I want to have gold? Well, it kind of depends how old you are, because gold is not transportable and it's not that useful, but it is useful for sovereign reserves and stuff like that. Of course it is. But on a personal level, if you want to go and live in Costa Rica, you know, lower your cost of living by 2/3. I mean, travel is one of the great things of all time because you learn different perspectives, which most people sadly lack. You lower your cost of living by 2/3 and you can take your money with you. Okay, hell yeah. So now you've got the internet connection, you can do your job, and you've got your system of hard currency. Yeah, it's volatile in the short term, but for your savings assets, okay, you're now set up. You're now as what they refer to as a sovereign individual. Let's put the log chart of Bitcoin up. Let's say that's our proxy for the space. Well, the log chart of Bitcoin tells you get to $1 million in not very long. Not very long meaning like 5 years, or whatever the number is, right? Again, it's not forecast per se. It's like by this, by then, but it's the trend of direction. So what must be true for that to happen? Well, a lot of people have to have bought Bitcoin. If a lot of people have bought Bitcoin and Bitcoin is currently losing market share, it means that the whole crypto market has absolutely exploded. So if that were to be true, what would be happening for that to be true? Well, many of these things that we're seeing experiments now are likely to get mass scale adoption. How? okay, the trend is you can now own digital assets, you've got these IP rights, you've got these contractual things. Well, for this world to be happening, then this is going to have to be most likely meaningful. You won't get all of these. Many of them will fail. Specific projects is even harder, but the overall direction is much easier. So in a